Okay guys, let's wrap up here and we'll put together a full template and do a bit of back testing here and give you hopefully some ideas of things that you can practice on your own. So again, I'm just back to the end of the week. We might as well start here on Friday. So this is this is a pretty full-featured template here. This is something I would trade. I might have a few other things on it. We'll look at that in a second. But just to kind of stay consistent with what we've been looking at here is now we bring in the bars. And we can see that now if we keep that focus on, okay, where's the momentum? Where are we with regards to the RSI? I've added the devil's edge here, which is a turbocharged MACD with Bollinger Bands. So we've added some of this. I've got a VWAP now on, and we're just going to kind of go through this. I want to just kind of review these same sections here. Now, what I haven't turned on here are the measured moves. So let's turn them on. Okay, now, the idea is here to go in and start looking here. Now look here, this is the most obvious. This is really a pretty obvious example. Of course, if you've done any day trading for any period of time, you know how important VWAP is. It's important to the institutions, and it continues to be that way. And you can see a perfect example here right now. When we get too far from VWAP, there's often a push to try and get back, and when we get to it, this is kind of a decision. It's a base camp. Are we going higher or lower once we tap VWAP? We start the day at the VWAP. And you'll see that it's very consistent. This is something to pay attention to. Now this is our VWAP indicator here, and I only have VWAP on. But just to so you have that frame of reference here. So this is a pretty nice example here. Now there's a little bit of a disparity here in terms of just pure momentum-based signals. So you see, as we come into this, now I'm just gonna focus on this because this is decision time. Now here, you're below the IB. Would you have enough room here? Well, there's not a lot of room right to the IB, and we know that's going to be natural resistance. Now there's 7 ticks there, and it actually ends up we end up with a little bit of a measured move. If it's me, this one I probably would not take. Just in terms of how because again, as I told you guys, this is a dangerous place to trade right in here, very algo thick. So you got to be mindful of that when the market's hovering around it actually did that annoyingly several days this week, where it's just not a place you can get eaten alive here with little losers, because the market just will stall as algos battle back and forth, and we don't know who's going to win it. But as we get up here, now we've hit VWAP, so this is a natural area to be considering. Oh, well, in this case, since we've been below it, coming back for natural resistance. Now we got a 50, we got a golden zone, we got the IB mid, right? So we've been down all day after down all night, and we're coming back to the midpoint of the day. But here's really what I want you to try and let me zoom in there a little bit. I want you to focus on this. So as we oh man, that's too much. As we start to come back down, this is why I wanted you to focus on the points of control. So it perhaps adds some value to see the down closing bars, right? So we get red candles down here. Let's bring that back a little bit. You may recall in when we had the candles off, we had the three POCs that were all right next to each other. Well, you're not getting clear signals here because you're getting wick rejection on both sides, right? So little rejection here. Bulls are still trying to push. Maybe we can get a rally here, get up to the IB mid. They're pushing for that. But now remember, this is 15 minutes of time. And this is, when I started this little series, the idea being that you've got time here to make a decision. Unlike a 512 tick chart here, where boy, this is really happening fast. And that's why if you were trying to track the POCs on a 512, it's just moving so fast. It doesn't really have enough meaning to where if I'm trading on something that small, I don't even turn the POCs on. It's just moving too fast to be of any assistance. But here I can see, oh man, with the volume. Well, here you kind of draw it. You can just in your mind's eye. Boy, the volume is sure staying right here, the majority of the volume. So I'm not getting, when the market starts to move, or you're getting a significant, well, here's a good example. When you're getting a significant push, like look where the POC is in this bar right here, right? So we've got a push, and we can identify the majority of the volume is up in that top third. And then we go sideways here because, why is that happening? Because we're coming into the IB range. Right, the market's unsure. Algos are going to fire left and right here. We don't know which side's going to win. But as we see, all of a sudden, POC starting to drop. starting to drop. Now let's get you out of there. Okay, now that maybe is enough for you to be finger on the trigger. Now let's look down below RSI. Now the RSI is always going to be more sensitive. It's going to turn more quickly than the MACD. This is a standard MACD. This line that you see with the little dots on it, that's a standard MACD. So this is because we're talking about moving averages. This is always going to lag a little bit. This is going to be your first tell. Now note we get outside of the Bollinger Bands. Now we start to turn down. So at this moment in time, you're looking here. Let's get my crosshairs. Okay. So here we are. Now, as we see the POCs starting to fall, look at the RSI. Now, note below, we've moved far enough to where we've moved twice the ATR, right? Because now I have red volume bars down here. So I know the retrace has gone far enough here to put me into a new swing. So this little swing here has completed. Now I'm in a downswing. Okay, so now RSI, so while this is going to lag, it's kind of a trend confirmation. I can see we're coming back into the Bollinger Bands. The center line is a vortex indicator. That's always going to lag a little bit. Now that's more trend confirmation. We're going lower, lower, lower. But the RSI is really which I want to, which would be my trigger here. This would just be confirmation. As I start to see these start to come down here, now I'm starting to get acceleration. Now, so I go from two triangles here, POC. Now this is a 21 period McGinley. If you don't have a McGinley, you could use a 21 period EMA. It would be very, very close. So as we come down here, now look at the POCs. Boom, 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 boom. Right, so the whole move, you can see the volume is drifting lower, and then we get acceleration as we come in. We need that acceleration to break the IB low because this is going to be natural support here. There'll be resistance for the market to move lower, and you can see it kicks back. They try and hold it. So as we come back down here, down here, down here, now all of a sudden, look at the tail. Right, so we've come far enough to where buyers are looking at that saying, perhaps that's far enough. And so some buyers step in. Now, do you want to be a buyer here just because you're seeing wick rejection? Well, not so fast. Now, let's get a little confirmation here because we're cognizant. Let me get this off here. We're cognizant of the fact that I could just retrace here and then just head back down again, which is exactly what we do. So this is kind of what you wanted to see. So if you were reluctant to take this, and now we're getting the retrace back here to go again. You can it almost does the exact same thing. Low, so we get very close to each other, then a little bit lower, then a little bit lower, then here just like this, then we get the little retrace back into the 50 between the golden zone. Then where's the POC? Down, sideways, down, down, down. Then big bar as we go back towards the end of the day. So the question I want you to focus on is, what are the criteria that you would use? Now, if it's me, I'm going to typically, I would enter on a stop. Oh, here's, maybe this will do it. I would enter on the break of a candle like that. So I would want to be stopped into the market going with the momentum. I can see that we've stalled here. We're starting to go now on the break of these candles here. I mean, it's up to the individual. You could use the break of that one as well, right? You see, this was I'm in here, something like that. Okay, so there's the break. Now, be mindful of the fact that you're coming right into the 21 McGinley. So the fact that you got to deal with that. So you got to look at that and say, oh, mixed signal. Now, do I have enough room? Do I have enough room to get to the IB? So what is there? That's the first thing I would do, is say I got 14 ticks to the IB. Okay, that's all right. That's enough for a decent scalp. I don't know what's going to happen here. Of course, right? Nobody would. So as you get down here, well, look at the RSI. Look at the devil's edge, right? Now the center line goes red. Look at the volume. Right now, this might what you might glean from this is that while we're getting a swing lower here, the volume is not substantial. I mean, compared to earlier parts of the day. So if I kind of scrunch this back up, it's not dramatically significant. So really, what you're seeing here is a lack. Now, granted, this is Friday, right? You're seeing a lack of enthusiasm. As we're kind of waffling in here, we get this. Now, is there a trading opportunity here? Yeah. Now, what I don't want you to do is imagine that you got from swing high to swing low. That's not realistic. But what you want to do is think about, say, are these the conditions here that would support me pulling the trigger? Now, you may not like it here because you're too close to the IB, and if you are tracking the IB, you know that that's, well, careful there. And as a matter of fact, we do get a break, but then it's quickly kicked back inside the RB. Bulls will be trying to get it, if nothing else, back to VWAP again. What do they run into? Now, lower, lower, lower on that break. Can you take, now look below, right? Can you take that trade? Let's go back a day, right? Because we've done a lot on Friday, and then we're going to actually do some manual back testing on it. Let's go back here. Let's see how it looks on Thursday. Any better right here? So I mean, here's the big opportunity of the day. So now, if you got that from tick to tick, which you're not going to, so don't. It would be. This is, it's worthwhile to see what was there. There's 81 ticks there, little over 20 points in that swing. There's 20, and there's probably 30 on the way down. So can you take the trade here? Well, this is a hard trade to take. So right off the bat, you're right at VWAP. Now, this is tricky to take, but to help you with that decision, okay, number one, what's there? Okay, I just hit a golden zone. Let's look below. Okay, well, I tagged, I'm at the 50. The center line is the 34 average of it. I tagged that. Now I get a little bit down here. I've got a squeeze happening as I'm hitting that. So I'm getting a contraction of volatility within this bar. Now remember, this is a 5-minute bar. So we sit here for a minute before we pull. Then we open here, right? So and then we close up here. So and you see where's the POC. So now all of a sudden you're starting to get acceleration. Now here's the natural resistance you're going to get right here. It's always going to be a fist fight at the IB high and the IB low, right? And you can see it happen here, right? We up and we get kicked back, but then they reload, up we go. Now, for me, I'm likely going to want to get stopped in on the break of that high. So what was there? All right, and we'll do this in a more meaningful way, right? So here's first algo target. There's 19 ticks. Again, assume you're not going to get to the penny, right? You're not. So allow for, let's bring it back here. So there's 20 ticks. If you're taking that kind of a breakout here, going with the momentum, what happens at the top, right? We've been through this a couple of times. Okay, so let me wrap this up here so I don't belabor the whole point here. Let's go back. Let's go back one more day. Here, this was the crazy Fed minutes, right? So nobody's trading in that, right? That's what are we doing? What did it say, right? This is, algorithms are literally keyed to every word, right? What did they say? What did they say? What did they say? And that's why you don't want to try and trade around that. Was there anything earlier in the day? Well, interestingly, as we come into the day, squeeze, right? Because we knew Fed minutes were coming. So here's the pump into it. This isn't a great day. Many people will just on these kind of days, right, won't even bother trading, right, because it's going to be a cluster F, right? Particularly, so the market. Here's the. I mean, you can. Here's the, while everybody's waiting during lunch, waiting for the minutes. What are we doing, right? Nothing. We're going sideways, but we're drifting higher. Not enough of a move here, since this is the last swing down. Once we start this move, there's not enough here to give me 2 times the ATR. So I'm just drifting sideways within an uptrend. Look at VWAP. Now, once the news hit, and again, you're not going to trade that. Once the news hits, though, again, these are 5-minute bars. So at least here on a news day, you might have a chance to trade it. Right here, and as the drop down, look at the POCs come down. Okay, let me here. Let's just quickly look at it here. Here's a 4,500 tick. Exact same idea. I don't want to leave out my tick traders, right? So many people just prefer it, right? We don't have any wasted time. It's kind of a nice way to say it. We don't have any wasted time because time's not a factor here. So the market doesn't move until we, in this case, move 4,500 ticks or get 4,500 of trading volume happening. So here, is it any harder, easier here? Well, again, here's that same point here. You're going to see the exact same thing, right? If you prefer tick charts, this is a proxy for, maybe not a 5-minute, but maybe a 3 or a 4-minute, right? So for example, on a 5-minute, I can get the whole day in easily. On a 4,500, I got to squish it up. So it might be closer to a 3-minute. But I've got time. I've got time up here where the POCs, lower, acceleration. Right now here, and I've actually got the MACD firing here, just to let you know it's gone outside of the Bollinger Bands. Right, little squeeze here on this one. Right. God, every time I do that, it freezes up. I gotta stop doing that. I think it's because I'm not connected to data, so it takes it a minute. There we go. Okay, so right here, note I've got a little squeeze. I get a little squeeze right here as I'm in the golden zone. Now remember, the premise in a squeeze is that from that contraction of volatility comes expansion. That's the whole point of identifying the squeeze. One, caution from trading, but from that lack of volatility comes an increase in volatility. So here's the squeeze. What comes out of it? Right, the RSI screams way beyond the Bollinger Bands. Now, same thing here, right? Big swing up, and this is where I hit the Bollinger Band. Pardon me, this is where I hit the VWAP on the day. As I hit that, look at the RSI. That's why I like this as well, because I can see the divergences here. I can see, boy, this was really a big upthrust here. Look, we got so far out of the Bollinger Bands. I get up here, boy, I can't. Looks like it's losing momentum. We start now. The RSI starts to fall. Look at the POCs. Oh, whoa. So maybe at this point you're saying, okay, now here I get more comfortable as I'm really starting to accelerate. Well, looking at the RSI, you're a little bit late, but you might have been, keying off of the 21 or the 21 EMA or the 21 McGinley, saying, hey, I'm going to wait and see what happens at the moving average. Once I start to get below and now I accelerate, now here, do I have enough time? Do I have enough room to the IB, which is going to be natural resistance? Or in this case, support? No, I don't. But once I break through, is there enough there, right? Now that's the big question, right? Is there enough there? What ended up being there before you had the RSI back in? Well, there's 19 ticks. Here we start coming back the other way, so you'd have been concerned, right? See the POC starting coming back. So worst case, maybe you only got 7 or 8 ticks, right? If you were tightening up a stop here, you only got 7 or 8. Back up here, what are we? Right back in that key zone. Where's the RSI starting to come down? This is far enough so that I've got twice the ATR. I come right into the pocket. Right, same thing. Oh shit, that's from a test run. Okay, let's leave that. Okay, we'll come back here with this. I changed this to 10,000 volume because this is closer to a 5-minute, so I can see the whole day from start to finish, which is when I started this video. I would encourage you to have that somewhere so you can see the entire day. You're not going to lose perspective. Right? Same kind of thing, right? It's going to be exactly the same. Here I've gone from a 5,000 volume to a 10,000 volume. Did any of these change? No, of course not. Does any of this change here? Did any of the POCs change? Did any of where the sellers got aggressive change? No. No, it doesn't change. Right? Does this change? No. Right? It's all the same. Right? But my point is, whatever you prefer to trade in terms of your bar, whether you like tick, time, or volume, or even Renko, it's not going to change. Right? So what I wanted you to do is really start picking these apart, one component at a time. And then we'll kind of structure it together. And then the ultimate exercise here is to go through this and start doing some back testing based on what you're seeing here. And if this is kind of something newer that you hadn't really considered before, then you want to start putting together some criteria and see if you can practice with it and then duplicate it in real time. So let me show you what I mean by that. So let me come, do I have it over here? Oh, I guess we don't know. So this would be a bit more full-featured here. I guess we don't need our trade panel, so we'll give a little more screen space. Oh, here, let's go. Let's. I guess we'll go back to the prior day, end of the week, and then we'll work backwards here. Friday was just a particularly good day because it was just an easy one. So what I want you to see here now, I've added to this what I think is a really underappreciated indicator that we have available for you. So yes, I am encouraging you to consider this. So no mystery there. This is the manual visual backtester there, right? So it's $199, or you can lease it, right? It's always an option with these, so you can lease them and test them and see if that's going to add value to you. So this is the manual visual backtester here, and you can read about how to use. Actually, my partner here does all my coding. Did a little video to show you how to use it. It's very simple, but very powerful. Okay, so we'll come back here and we'll look at this because this is such a good example. Now, if you're using the manual backtester, you got a couple of hotkeys. Now, all it's doing is we're going in here. Oh, where are you? TDU long short here, and then they're hotkeyed. Now you can change those to whatever you like, but short trade shift F11, long shift F12. Okay, so let's look here, because what we're after here is trying to create the environment to where you would look to execute a trade and then see if you can start practicing and then test yourself. Now this is going to be different because when you're, oh shit, I got the buying profile on there. You can't, but when you're at the hard right edge here, okay, right? It's always easier in hindsight because your brain already knows what's coming, the net result of it. So we want to try, and you could certainly do this in market replay, but I think for our purposes here, we can do it this way because what we're focusing on here is what's happening at the decision time. What's happening here? Now, I will say this with bigger bars here. So when you've gone from the 1 minute to the 5 minute, or the 512 or 2000 up to a 4500 or a 5000 volume to a 10,000, the market needs a little bit more room so that you're not vulnerable to getting stopped out intra-bar. So you might have the bar end up going the direction or closing the direction that you're anticipating, but these bars are big enough here because they're 5 minute bars that you need a wider stop. So my suggestion here is just a suggestion, is that if you're going to trade on a 5 minute chart, I would encourage you to consider a 16 tick stop. Now that's $200 a pop. Now if that's too much for your account size, well then of course the next thought would be to switch to micros, and then maybe you trade a 1, 2, 3, 4, 5 lot, right? So you can get the size right so that a 16 tick stop isn't disproportionately high for your account size. But at worst, the market's so volatile right now. My suggestion is any account less than, and I mean a penny less than 20,000, should be trading micros only until you build that up. And if you're still in the learning, developing phase, I would encourage you to trade micros for at least 90 days and prove yourself you can do it profitably with micros. But not to digress on that. My point being here, you're going to have to give these a little bit more room because you've slowed things down, the bar size tends to be a little bit bigger here. So that said, if we're looking here, there's a couple of things to consider. One, what is your criteria for entering the market? Now, is I've tried to teach it to you here. Part of the first thing here that would have you looking is, well, okay, well, I've come back to VWAP. Second thing, which again, assuming you can either pull it, right? You can pull it yourself, right? But you're gonna miss some, right? That's the beauty of the measured move in the auto fibs. You're not gonna miss one. Right now, you could have just grabbed the fib tool here and said, "Oh, hey, I've got VWAP and I'm in between the 50 and the golden zone." But it's very easy in the heat of the battle of the day to miss some of these. So that's why the auto fibs and the measured move will always make sure you don't miss them. Right. So for example, if I'm thinking about getting into the market, I'm going to do this. Right. So I'm going to bring everything that's on the right over to the side so I can see it. So because I've done this too many times, and if you're not aware of this, I promise you've done it too. As the market starts to rally, if you don't know that golden zone is there, you'll buy right into it. Right? You'll buy because you don't know it's there. Right? Same thing here. Oh, maybe it's a last minute rally at the end of the day. What holds it back? Right? It literally splits the golden zone. Down they go. Right? So this is just a piece of software. This is just an algorithm. Right? They sell it there. Right, same thing here, all the same, always the same, right? Dominant, it's the DNA of the market. It's not why it moves, it's how it moves. Okay, so if you're right here, now what is your criteria? Could be, as I said, it could be you're going to break a break of, let's use a break of that low. There is your criteria. Okay, so if we're breaking this low, so the RSI has turned red, gone from outside the Bollinger Bands coming in. Here's the 50, right? So we're coming down below the 50. MACD always is going to lag a bit, right? But now we're back in the river, the middle line, but here, just like here, right? Just called the river. We're back in the river, so the dots are wet. Now we've got we've gone far enough here. We've transitioned, so I know I have a new swing started here because I'm red down here. I've gone far enough. In fact, if you weren't aware of it, on the zigzag here, where it would move 2 times the ATR to give you a new color is always marked, right? You can always see how far does this have to go for me to move 2 times the ATR. So right here, it was the same thing. That little marker here would have been there, so you knew, okay, that's when I start a new swing. That's when I've gone 2 times the ATR. You can almost use it like a stop. Right, so if you're short and we're coming back this direction, if I go 2 times the ATR the other direction, I may want to be out. Something to think about. Okay, but here we are. Okay, so we're here now. The RSI has turned. MACD beads are back in the river. I've gone 2 times the ATR because I've got a new swing that has started here. So if I'm trading here, well, back to the pivot, let's just measure that, right? From my entry, come here. From my entry back to here, that's 24 ticks, right? That's too much, right? I wouldn't do 24 ticks. But the max that I'll do on a 5-minute is 16. Now, one of the things that we can do here, since we're using our manual backtester, it's going to track, and this is why it's such a valuable tool to practice. So you'll recall I have it hotkeyed, so I'm going to go Shift F11, which is the hotkey that I have set up. So here's my entry. So I'm going to enter on the break of that bar. Now let's assume a tick of slippage, and I'm going to just start to head lower. Okay, so from that entry, I've got the default here set to, well, let's just stop there. So I've got the, let me show you this. So if I go to properties, I can set this, makes it easier to work with. So whatever your stop is, so I can say, okay, my maximum stop is 16 ticks, maximum. So for me personally, if I take three losers in a row, I'm done for the day on a full size contract, or I'm going to switch to micros, right? 600 is my stop trading. Well, let me rephrase. 600 is my stop trading full size. And that would mean I had multiple losers. I'm just out of sync with the market for whatever reason. I'm having an off day. If I hit negative 600, if I feel like I just got caught in some whatever reason, I got caught in some things or made some whatever the reason may be, I switch from full size to micros. Right now, that's me. Right? It's just that's what I do. But my point being, if you're going to use a 16 tick stop or 200, make sure that if you take 3 losers in a row, you aren't doing severe damage to your account. So that would be inappropriate to a $5,000 account. It's just too big a percentage. So thus micros. Again, my strong suggestion: 20K or less, micros only. I think you'd thank me for that if that's not what you're doing. Okay, there we have it, right? So we're just going to assume this one. So I took this down here. Now don't assume you're going to get tick low to tick high. What would make you nervous here? Well, the very first thing here is this big push off the wick, right? Because there was plenty of opportunity. If bears were going to push it, what are they going for? Well, bears, of course, are going to go for the liquidity. Where's the liquidity? Right there. Right, and they came and got it ultimately before they took it back up, right? Because every pivot there's stops under every pivot, right? Every trader on the planet knows that. So there's always a push to get to prior pivots, which is why recognizing the pivot structure is important. Right now, is this a pivot? Yeah, it's a pivot, but it's not a significant pivot because it's not 2 times the ATR. Is it meaningful to you as a trader? Well, you got a perfect measured move there. Right? So it's not to be ignored, but this is much more significant to me than this. So essentially what you have here is if I had the order blocks on, you get a little pause here. So we get rally, base, rally. Right? That's all that happens. It just happens to do it within the context of a measured move. I'm digressing. Okay, so I've got one trade here. Now, can you take this one here? Well, maybe you're uncomfortable here because of the exact same reasons that I told you, that this is a high-risk place to be trading. But when I break down here with this harsh bar, right? So we come down, we close on the low. Look at the POC. Now, you don't want to chase here, right? So you got to be careful here because exactly what happens on the next bar, we're going sideways, then I'm getting a little retrace here. This is the better trade of the two. Because now you had 5 minutes here, you had time to think about it. So if you weren't right there taking the breakout, right, which would have been okay. Now be careful about giving yourself too much credit. Would you have taken that? I don't know that I would have, right? Because you're right at the IB, right? So just knowing, because I know how thick the algo activity is here, but also the POCs over here. I mean, there's enough to make you hesitant here. So don't be honest with yourself. Would you take that? I'm pretty sure I would not. But on the retrace here, when I start to get a little bit of a push down here, this looks more tradable. So here I'm going to shift F11. So on the break of this low here, so I'm going to go here. There's 1-to-1. Oh, I probably wouldn't have stuck around for more than that. Okay, so these two little trades. Now you look here and you say, okay, a 16 tick stop, but from where I entered, we did not go back 16 ticks to go against it, right? So I'm just checking the break of the low of the bar here. So I'm actually filled right here. I get a little bit of a kickback, right, before we carry back on, right? So oh shit, if you can see it, it's here. I'm down here. We start to move. Here's the entry. I get a couple of bars kicking back. Now you can't panic here. You're better to put the trade on and not panic here. This is a common problem traders have. They'll panic here. Well, slow down, right? I mean, that's 10 minutes of time. Your stop is right there. Now look what happens at the close of this bar. Where's the POC, right? How about the next one? Right now, like, hey, okay, right? Now this is just the natural ebb and flow of the market here. Not surprising that we didn't just go in a straight line, that we waffled a little bit. But now, okay, now, so you've taken two one lot trades, 16 tick stops. Now only you can decide for yourself whether those trades you would take. Would you have taken any of these? Right? I wouldn't right here, right? It's a little bit, I wouldn't. But now once I start to break away, maybe. But again, this is tricky here because you're running right into the VWAP here. So there has to be enough room on the field for you to move. Now if you're scalping for 4 ticks or something, well, you're going to use a 4 tick target with a 16 tick stop. You better be right 90% of the time. I'm trying to encourage you to move away from that kind of thinking and just be much more selective about what you're taking. So this is a little tricky in here, but two decent trades where you didn't have to be perfect. You could have just taken a conservative entry. Let's go with the momentum. The momentum is coming down. Same thing here. The momentum, look at the RSI, is red and coming down. Now, look how quickly we reverse once we get the pivot here. Now we're coming all the way back the other way. That's Friday, right? Jesus. I keep trying to do these faster, but I'm not so good at it. Okay, it always seems to be takes longer. Okay, so here we are. Here's another example. Now now remember, I got 5 minutes here to think about it. So the first thing that happens after I come out of the golden zone here, well, first I get high speed, right? So I've got bulls are aggressive here. Then I get on the other side of VWAP, then I get on the other side of the 21 McGinley. Now, do I have enough room? Well, note here, I've already had the first test of the IB, which is, okay, here I digress again. If you don't know this, that's the easiest trade of the day, every day, bar none. Right now, it's not 100% of the time, but it's very, very high probability because there's an algorithm that sits here on both sides of the IB, and on the first test, it will fade it. Now, that algorithm does not make money every single day. There are days where it's news driven, or for whatever reason, bulls are very aggressive, and you can see it. It'll come and it'll just blow right through it. Again, first test only. It's not consistent throughout the rest of the day. It will be natural support and resistance, but where the algo fires and where there's a trade waiting to be had every single day, right? Don't expect 100% win rate, but a very high percentage where you see the first test, it'll retrace and often just right back to VWAP, right? And then now here we got see here. Do you note here as we come into it, the POC is off the high, and then I had aggressive selling here, and I'm hitting this at 10:45. So because these are 5-minute bars, it's very possible here this went up because as we entered into the next bars, the POC is lower. You had a shot here. Now that there wasn't a lot there, but from once we're back into the IB to VWAP here, would you have 20 ticks, right? And you can see acceleration. We hit the golden zone. Look at the acceleration going back the other way. Why? Software, right? I promise you that's not random. Right, it's not possible to be. Right? I've shown this probably 10,000 times. 65 to the tick. Well, where's the target? So you got to look at that and say, am I taking that trade? Well, I don't know that I am. But could I take the break of this? Oh, come here. Right? Could I take a break up here? Oh, let's just make that a straight line. A break of these pivots as I start to go here. Now again, you got to decide whether or not that's a trade that you can take. And if not, what you want to be doing is putting this into your mind's eye, saying, okay, if I see that next week or next month, whenever, assuming you're going to start to try and work with these concepts, am I going to take that trade? So look below. What's the RSI doing? Well, in this case, MACD is fired and we're outside of the Bollinger Bands. Look at the the swing structure, right? I had the pullback here that was just enough to get me into the golden zone, but now I'm going the other direction. Now when I get to the pivot high here, this is why I like to see it. Note that I get a new high here in price, right? The range of this swing is higher than the first one, but the volume is lower. Now as I get up there, all right, what starts to happen? So can you take that short? Look at the POCs. Can you take that? What? I mean, it's all. I hear you guys. I hear it already. I hear it in the back of your head. Yeah, easy in hindsight. Well, that's what I'm trying to get you away from. Okay, if you're right here, remember you've got time. These are 5-minute bars. This is 20 minutes. You have to think about this. Where are those POCs? What's happening on the look at the wick rejection up here. Bulls are getting. They're not getting any traction. Let's say it that way. Right, and then as they're fading and the POCs are coming down and the range of the bars is getting smaller, look below. Can you take that trade? Well, let's just model it up. All right, so let's assume a tick of slippage. You're going to have 16 tick stop, right to VWAP. Well, it's a little over. What do we get? There's 300. There's 25 ticks. I'd likely have only taken it to VWAP, right? That would have been a clear target because I'm expecting the market to bounce there. Not necessarily bounce and go to new highs, but I'm expecting a reaction there. One trade, right? Now this, right? Oh, pardon me, I missed the long one. Right here, all right. Now let's assume that you're not going to get all of it. Oh, there's 23 ticks. Now you got to look at that and say, okay, down below, right? Even if you that thing lags, but if you look down below, right? Is there anything here saying anything other than buy it? There's certainly nothing here that's negative. There's certainly, well, let me rephrase that. There's certainly nothing here saying sell it. So your choice is no trade or go long. Now, how about right here? Right, different story. Now, this is still climbing. This is still green, but the RSI, right? What I want is all three of them in sync. And in addition, if I can get any clues from the bar, what's happening intra-bar, i.e. POC, rate of speed, if I can get any clues there, then that's all telling me, yes, that's a trade I want to take. Now, I know we're doing this, and you're thinking, yeah, but it's hindsight trading. But the point is to identify this and say, okay, next time I see that, I can take the break of those lows. I can use a 16 tick stop. I've got time to think about it. And let's just assume I'm taking. See this. When I started the whole thing, my goal here was to get you to be trading less and more quality over quantity. And that's what I'm trying to get you to focus on here. There are enough clues here. The market is giving you the clues. The momentum indicators and the volume indicators are giving you additional clues. Now, can you pull the trigger there? Now, you can come over here and you say, oh, okay, is there anything here I would have traded over here? Well, there's nothing here that I can say, okay, well, okay, the RSI is climbing. Okay, maybe. Again, this is high risk trading right here. Right? This is death of 1,000 cuts. If you're not careful, when you're right around the IB like this, here we're coming into 2, 3 o'clock. I remember this, right? Because I'm posting in my room, hey guys, this is a high risk area to enter. Great target, but to enter the market around the IB, again, it's very algo thick, right? You're going to be vulnerable to getting wicked out here. So be careful now, but eventually we start to, now last thing that happens is a squeeze. So after all this contraction, eventually the squeeze is identified because we're not going anywhere. Now remember, the premise of the squeeze is from that contraction comes expansion. From that lack of volatility comes an increase of volatility. What comes out of it? Pop outside of the Bollinger Bands. Our RSI goes green. We're outside of the Bollinger Bands. This big swing never had a retrace over 2 times the ATR. So the only bias you would have would be to the long side because of this. Now, are you taking that? Are you taking this breakout here? Well, you could do the same kind of idea right here and say, boy, these were, you know, this was pretty stiff. Now I come, boom. Maybe on the retest here. You know, you gotta determine how you would approach that. I just want you to start getting some consistency in terms of how you're going to approach it. That's a reasonable targets right there. I mean, that's pretty good there. So you got 31 ticks. That's a 9-to-1. You entered up here. Here's their stop down here. Here's the entry on the break of the highs. Boom, up we go. How are we doing so far? I mean, well, let's assume you had a couple of losers as well, right? You misjudged something, you missed, or you just had a loser. Well, you've got 5 trades, and you're already at $1,700. Okay, all right. Let's just say, yeah. Hindsight trading. I know, yeah. Right, but that's not the point. The point is for you to start practicing and see how you do, and then try and be consistent. So when next week when you're trading and you're on the hard right edge and you're like, well, shit, I don't know what to do there. That you look down below and go, okay, right here, right now, is there anything here telling me to sell? No, there's not. Nothing. Now. Oh, well, look what just happened. I broke the IB with high speed. The RSI has turned red. The Bollinger Bands, I'm below the center line here. So I'm below the vortex. I'm come out of a squeeze. Now I've got an increase. I've got a red dot in the MACD, and I've got a new swing heading lower. Right? Doesn't last long. What do we actually hit here? So I'm assuming you see what happened here. Swing, retrace, targets. So actually every pivot to start the day is part of a measured move. Here's the first one, second one, third one. Which of these are you taking? Here's if you'll note this right here, if you look down, that's outside of 1030. Here's the first test of the IB low. Right? Here's a trade. It's easiest money on the board every day. 30, just you'd be looking for VWAP. IB mid's good. There's $482, right? All you did was just wait for the first test of the IB and look for the reversal. All right, something to watch for. As you come down here, what happens, right? Note the divergence. So if I bring this up a bit, right? So each one of these, so I can see I've got a little wedge here. Each one of these swings has had lower volume. But I'm getting new lows. Lower low than this low. Lower low than this low. The volume is contracting. Right? I'm not getting as much volume, so the move is running out of steam. I can deduce that. Now, in addition to that, I've got 3 targets. Three measured move targets getting hit. Now, targets are not a buy signal, but it's a heads up. Now, as we come all the way here, are you taking that trade? Well, you got no pullback to work from, so probably not. And then we're going into this. We looked at this, so there's really was nothing else here. This is the waiting for the minutes and then the minute craziness, right? So not a great day to be trading. Let's go back. Oh shit. Let's go back, see if I can get one more day in, and I got to wrap this up. Oh my God, I've gone way too long. Oh, I'm out of days. Let's go over to same thing with 4,500 tick. Now let's see, I may not have what have I got you over here? There's the 5 minute. This is a little more full featured here where I've got the market structure and support and resistance here. I think hopefully let's come back here. I'm digressing quite a bit. I want you to see these. Jeez, I thought I had more days on this. Let's go over one. I've got more days loaded over here, so let's go. That was the Fed minutes day. No, pardon me. This is the Fed minutes day. Let's go back. Do I have it? No, I don't. So we're going to go back to Thursday. Let's look at Thursday. Thursday was that unusual day where really there was really this was the trade right now. If you're keying off of the measured moves, this was a difficult day because one of the things you have been looking for here, you'll recall when I said earlier, when we get a break here, so since we broke, you'd have been looking for this on the way back, right? So since we had that big break, when it got to right here, you'd been looking for that to come down and get its target, which would have been from here down here. Right? Since we had the break here, this is a common trade, but in this case, all we can do is get to VWAP. So now you're getting to VWAP. So what you were anticipating happening here doesn't happen. So either you had a small loser, a scratch, because it starts, right, but it runs into VWAP and it kicks back the other way. Now, yeah, I do have them on. So is there anything here that well, only you can make that decision whether or not this coming out of this congestion is something you would have pursued, right? Here's the congestion around the IB high, right? Algo thick. Now as we come out of it, you got to decide whether you're taking that. Oh God, there's the 5 minute. We have that one. 4,500. It's kind of same idea. I don't think I have the manual backtester loaded, but you kind of get my idea. I think when you're here, I want you to start experimenting with putting that manual backtester on, just like I was doing it on the 5 minute, and say, okay, if I take that trade and I've got a 16 tick stop or whatever stop is appropriate for your account size, right? And again, no shame in trading micros, right? You put on a 5 lot in micros and you'll be just fine, right? At the end of the day, if you're a good trader. So looking at some of this price action here, it's a great exercise to use that and go through and then see how your tally is at the end of the day. Now, odds are we tend to be more forgiving to ourselves, right? When we're doing back testing, right? Like this, where it's manual. So what it's designed to do is for you to practice so that you can recognize, okay, if I see this setting up during the week, can I pull the trigger there? And can I sit with it? And can I put my 16 tick stop on and just let the outcome come, barring some sort of gigantic reversal or news event or something that happens, right? And you never know when those bars are coming, and they do come. Don't be easy on yourself. Be a little bit harder on yourself, right? Would I have stayed for every tick? Probably not, right? Are you going to get 3 bars in a row here? So if you got this move, well, here we could do it this way. If you got the break here, let's come back here. If I got the break here, there's 16 ticks. So if I entered the short here, as this started to accelerate down, RSI is going negative. The center line is red. We're pushing down. I've got a new downtrend started here. If I'm going to take the break here off of the idea here that I've hit this structure here, and now I'm going to accelerate down, am I going to get all of it? Am I going to stay through the kickback here? Well, I don't get stopped out. But you got to answer that. And then here's the other question that you might consider right here. Well, you got 1-to-1 here, so you got 200 in profit here. So again, assuming the entry here, assuming a tick of slippage, you're going to come down here. Well, here you got 200, and now all of a sudden, look where the POC is. Now POC. Right now you only you can decide and be honest with yourself whether or not you're going to stick around for that. Likely, right? If it's me, I'm gonna be out here and maybe only make 8 ticks. As it starts to come back the other way, I'm just gonna close it. Oh, here, let's just get that off. I'm gonna close it, but I'm not afraid to go again. So as I come back to the next, now look how good this one is. So I come back to the moving average. I tick it, literally tick it. I'm in between the 50 and the golden zone. Look at the first bar. Boy, speed. Now look below. Everything's red. Now I get a little bit of sideways here. Let's do it again. We'll do it again here. So if I'm right here, there's 13 ticks, so I can actually give that a little more room. I can give it there's 16 ticks. Okay, so here's a 2-to-1. So there would be 400. So if I'm taking it here off of that bar, I get a little bit of a kickback here. Or you can't panic here. It's easy to do, right? So that's why often it's better to put the trade on, watch it, but keep your hand off the mouse, because it's very easy. One bar here, one POC that's rising, and then you can bail, and then you take a small loser, and then it ultimately goes that direction, right? And it's harder to pull the trigger the second time, because you get in that, oh shit, am I revenge trading, right? You got to be careful there. So if you're going to give it 16 ticks, unless you start to see it really, it's heading for, and you want to minimize stops, right? You minimize the damage. Maybe you only get out and you lose 12 instead of 16. If we start getting on the other side of the moving average, probably no reason to be stubborn and stick with that. What you want to be careful about doing, and I've done it. It's very tempting to do. Say, okay, I'm going to give that a little more room on the other side of the golden zone. Well, now you just changed your risk reward scenario. Now you're risking 262. Would it have worked here? Yeah, it would. Careful, that's a habit that will get you in trouble. If you're committed to a 16 tick stop, the one thing, the single best advice, if you've watched through however many 2 hours we are in, don't move your stops. Always a mistake. Because even if you get away with it, then you'll do it next time, and you'll do it the next time, and maybe you get away with it again. Ooh, good thing I gave it more room. If you're trading with a 16 tick stop and that's a problem for you, when you put the trade on, walk away from the machine. It's just never a good idea. Now, the reason not to do that is because if you start to see a kickback here that's meaningful, then you're going to ride it all the way until, if you didn't get your target down here, you're going to ride it all the way till you take the full hit, and you had almost, not quite, almost 3 to 1 on that to the low, right? There's 2.5 to 1. Now you're going to get that. Now don't do that, right? Don't say, oh, I would have gotten it right to the tick, because you wouldn't have. Nobody would. But it's really more about the entry and the stop. Can I take that trade and then look below, right? So the next week or next month, whenever, when you see that scenario here and you say, okay, I'm going to take the break of that low, I'm going to go in with the momentum, can I take that trade? Right? That's what I want you to focus on. And then, of course, the manual backtester will give you a score. Well, how'd you do? Right, here's 5 trades, no losers, right? So let's assume you had a loser, maybe 2. So take 400 off of that. Still pretty good result. That's kind of what I want you to think about. And you might do it for 2 weeks. Now, if you're on a 512 tick chart, that's going to be laborious. If you're on a 5-minute, a little bit easier to do, right? And it may reinforce in your mind that, hey, maybe I'll slow down. Maybe fewer trades, lower trading costs, be, again, quality over quantity. And see if that's reflected here in the results. But be hard on yourself, not easy on yourself. Okay, guys, I got to wrap it there. That's everything I can share here. Hopefully some of these tools, some of the drills that we did just in terms of reinforcing that POC is very important. And then the measured move that's the keys to your success, right? It's just because it's there, right? It's always easy at the end of the day to say, look at all the measured moves, right? But can you make the decision at that time? You don't have to catch the tick low of the turn, right? In fact, most of these examples we didn't. I mean, look here. Here's where it started, and here's where we entered. You don't have to get the tick low or the tick high. You're not going to. So don't go through the manual backtesting saying, oh, look here, I had $700 I could have gotten. Be hard on yourself, not easy. Okay, guys. With that, I hope you find this helpful. Keep in mind everything that you've seen here, all of these indicators, all of these tools, they're all. You can dog going off. You can trial all of these. All of these are available for trial. So you got a full 5 trading days to trial these. Even the manual backtester, just trial it. See if you make some progress with it. Okay, there you go, guys. With that, have a good one, and we'll see you next time.